right, so you've been wondering for a while now, what is the greater DC area housing market going to do moving forward? Should I buy a home for me and my family now, or should we wait? Are interest rates going to keep going up? Are they going to come back down anytime soon? These are the questions everyone I talk to has, and the best way to answer them is to get a full understanding of the current housing market data. So in today's video, I'm going to do just that, but in a very quick and easy to see format. Let's go. Now let's jump into the housing stats from July 2023. The middle of every month, we get the previous month's full numbers for the housing market. And there's two different comparisons here. One is month over month, so where we were from this time, or where we are today compared to last month, and then where we were from this time compared to the same time last year. So month over month and year over year. We're gonna start with new listings, new pendings, and closed sales for July. And as you can see, everything is down. We're in the red all across the board here. Total amount of new listing is down 10% from what we had in June, and down almost 35% from where we were this time last year. Total new pendings is also down 5% from last month and 10% from last year. And the total amount of closed sales is down 20% from June of just last month. We're down 20% for the amount of closed sales versus the same thing from this time last year. Now, the median sold price here is $590,000. We are up 5% from this time last year. So as you can see, throughout the past year, home prices have risen in the DC Metro around 5% on average. We are down almost 2% from this time last year, which is normal because we're going to start to see homes sit a little longer and prices come down as we head into August and in the early fall, when home sales usually slow to begin with. But this number is wild to see that home prices have risen over this last year when everyone was certain that the market was going to come down, especially when they raised interest rates from 3% to as high as 6% there for a little while. Now we're above 7 for the first time, which is getting a little scary. Total active listings, average days on market is still around where we were for the 5-year July average is around 19. We're 17 throughout the entire market. But what's interesting is the average sold to original list price ratio. What this means is that homes are still selling for over what they're listed for. So what does all of this mean? Simply put, inventory is still extremely low, and not still, it is lower than it's been. We are down to, like I said, those 2008 levels of total closed home sales. And why is that? First-time home buyers seem to be taking up, I think it's over 50% market share of the amount of homes that are being purchased. And normally that's much less. But homeowners are thinking right now that they want to sell their home and buy something else, are too scared to get rid of their very low interest rate, whether they bought their home in the last 3 years, or maybe they had their home for a long time and they refinanced into a much lower mortgage. They don't want to trade that for a much higher interest rate today for a lot less house. So a lot of people are very comfortable staying put. They're doing additions and fixing up their homes. Will this change moving forward and when rates eventually come down? Sure, but for the time being, it's creating an extreme bottleneck for the amount of closed home sales and why prices are staying high. Now, many buyers feel like they're stuck in the middle. There's homes that have been sitting where they feel like they can get out, see it, and negotiate because there's things that need to be done, or maybe they're just grossly overpriced to begin with and they've become stale. On the other side, homes that are just hitting the market that are, well maintained, that just absolutely shine and are priced correctly are still seeing the multiple offers and the attention from all the buyers. So, I have buyers now that want to sit on one side of the fence and go only see homes that have been sitting for a bit, where we've gotten a few under contract, where we've negotiated, we've gotten full inspections and full appraisals, we've gotten money back at closing for seller contribution that they can put towards fixing the home or buying down their rate. And on the other side, there's homes in certain areas where we're still going in like we did, months and last year, where we have to go in pretty high. We're waiving some contingencies. There's many different tips and tricks that I use now for my buyers, rather than just going as high as you can and getting rid of everything. There's a line divided at the moment for homes that have been sitting versus homes that are just coming to market that are priced well. Now let's dive back into the screen here and take a look at current mortgage interest rates and what we've seen since May of 2023. Okay, you're gonna see jumps and dips in the interest rates depending on what the Fed has to say, but as of today, we are officially over 7%. If we jump down here, a 30-year fixed rate, now this is putting 20% down is what they're assuming, is up to 7.15% on average. Now we know at the last Fed meeting in July, they raised it a quarter of a point. The consensus is that that's going to happen again. I'd say 50% of the folks think that they're going to raise it another quarter of a point because they need to get inflation down to 2%, which is their benchmark. That is what they're going for. While another 50%, the other half, think that they're going to actually start curbing these increases because banks are starting to fail. The market is getting extremely volatile. They don't want to cause too much destruction there. So, we're going to have to wait and see. The next meeting is September 19th. So we'll see exactly 1 month from when this video comes out what's going to happen. But see, despite the pause in June, most analysts predicted the quarter-point rate hike in July meeting. The consensus among market experts suggests that the Fed may introduce one more 25 basis point rate hike this year to get down to that 2% target. As I mentioned previously, despite difficulty, first-time buyers persist in the 2023 market beyond what people think they were going to do, marking a strong shift from the past several years. 2023 may be the year of the first-time buyer. Now, this was written in July, so we're already halfway through, and that's what they're predicting. The NAR, the National Association of Realtors, reported that the portion of first-time buyers shrank to 26% in 22, down from 34% in 2021. Nearly half, like I mentioned, of buyer agents indicated that they've worked with a first-time buyer on a sale that closed in June. Over 40%, which makes perfect sense. Again, if I'm a seller, it's very difficult to sell my home and get rid of my interest rate unless I absolutely have to move, because if we do the math, which I'll do here in a second, what you can afford at more than double the interest rate you currently have is not going to be the same house. It's going to be a much, if anything, it's going to be the exact same house that you're in for double the payment. So it really doesn't make sense, but folks need to move every single day. And I know there's a lot of you out there that I talk to that are moving from out of state to the area for work or personal reasons that absolutely have to be here. And I have folks that move throughout the DMV, whether from Maryland to Northern Virginia, DC, or wherever, that are either forced to, or it's the time for them to make a move. Unfortunately, it may not be the perfect buyer's market at the moment, but not everyone can wait for that perfect market. It's absolutely impossible and not smart to try and time the housing market. So what can buyers and sellers expect right now? Let's start with buyers and how buyers can take advantage. They need to be aggressive for the homes that they truly want. They need to be, really rely on their realtor that knows when and how to negotiate, how to build rapport, how to find what's motivating the seller. Where there'll be homes that continue to receive multiple offers where the highest bidder with the lowest contingencies will win. Absolutely. But now is the time to take advantage of homes sitting because they're overpriced and overlooked. Buyers are hitting the sidelines because of the affordability issue. So if there is a home that you like that has higher than normal days on market, it's time to put in an offer using comps and current data to show why the sellers need to take it seriously. Work in your inspection and your full appraisal. Now, sellers, on the other hand, absolutely have to take advantage of the low inventory and price their home appropriately. Even with so few homes for sale, gone are the days after listing high and receiving even higher offers. The higher interest rates of today have curbed those types of offers. Pay attention to the comps and what homes started at before being driven up to their closing date sales price. The starting point is where you want to be closer to in order to get those multiple offers with low or no contingencies. Either way, as a buyer or a seller, make sure to develop a game plan with your realtor so you know how you're going to attack this current housing market. Now, I want to show you guys a house affordability calculator. This is going to be helpful to understand what the change in interest rates does to your overall purchase power. So if we look here, if we wanted to say have a monthly payment of $3,500 all included, you're putting $50,000 down on the home for a 30-year fixed loan, and we're going to use the 3% interest rate of last year. Average property tax, let's say 1%. No HOA on this particular home, and $300 a month homeowner's insurance. The amount of home that you could purchase would be $675,000. Okay? Now, if we just simply keep everything the same, let's not assume that cash changed and you're not going to put any more down. Let's not assume that taxes or homeowner's insurance has changed. Let's just go right to the interest rate to go today of 7%. $675 changes to $471. for the same monthly payment. This is a good exercise to understand why buyers are hitting the sidelines. And we're only seeing interest rates go up at the moment. Many people predict that for 2023, we're not going to see them come below 6%. When will that change in the future? I'm going to have a whole other video talking about the interest rates and what they're expected to do or what people are predicting. But as of now, home prices are only going to continue to rise if they do drop, because as everyone's waiting for those interest rates to drop below the 7%, 6%, if they get lower than that and inventory doesn't change, buyers are going to flock back to the market and start plucking those homes right off of it. And it's going to just drive the price up more and more, as we've seen over the last 3 years. So this is a good understanding of what a change in interest rate does to your overall purchase power. As we continue throughout the rest of the year, who knows what's going to happen? I don't like to pretend that I know exactly where the market's headed. I like to use current data and to get a better understanding of where we are today and why, and where we can expect to go moving forward. And at the same time, there's always going to be unforeseen factors. But as long as we know of what's happening now, we can also understand that if something were to change, say tomorrow, these numbers and the way things are won't take an immediate effect. An example is the inventory. Even if sellers start to sell right now, we're not going to see any changes over the next few months. Right? It's not something that we're going to see tomorrow, where all of a sudden homes are going to be available perfectly and they're going to be lower and all that good stuff for buyers. So we want to be prepared as the market starts to shift. But at the moment, rates hitting over 7% for the first time, inventory lower than it's been in the last decade. We're seeing some higher prices. Are there homes available for buyers who are looking to move? Absolutely. I get my buyers under contract every single week. And again, everything seems to be, on one side of the fence. There are either multiple offers on homes that are extremely popular, or homes are sitting and days on market is high. There's a condition issue with the home, or there's just simply overpriced. So we're able to negotiate and get the terms that the buyer wants. Maybe they have to do a little legwork and fix it up a little bit, but that's an approach that a lot of my buyers are taking. So if you guys have any questions, as always, feel free to reach out, call or text, email, or just comment below. And hopefully this has been a good snapshot of where we are towards the end of the summer of 2023. I'm going to continuously do this every month so we can see the changes and get a better understanding of where we are headed. All right, guys, hopefully that was helpful and gave you a good understanding of where the market is today, so you can make a better decision as you decide to make your move to the DMV and greater DC area. But even more so, aside from the housing numbers and the stats, I want you guys to have a good understanding of what it looks like to live here. So check out this entire playlist of full 4K driving tours I've done of every single town throughout Northern Virginia, Maryland, and I'm adding to it every single week. Let me know if you have any questions. Check out the videos, and I'll see you next week.